Hey, Simpler, it's Chandler. Hope you guys are doing well. In this video, I want to take the time to explain and share and break down one of my favorite and honestly, one of the most powerful indicators that I have ever used and seen in my trading career. This is something that I've learned and used since the day that I learned about it. It's truly changed my game. So I'm excited to dig in, guys, share this with you. I'm going to break down how to set it up like I have it, how to use it, and then show you guys a few, real life examples that have happened here recently. So let's dive right in. The indicator I want to share, guys, is called point of control, aka POC. And this is a reference point that stems from an indicator called volume profile. If we just start fresh here, guys, on a naked chart on any platform, typically you can find something, again, that's called volume profile. And if I just slap this on my chart, this is showing you a big little volume grid plotted on the right, which is showing you the certain price points of how much volume is occurring, right? So, right at this 80 level, we had this much volume occur. You can see the breakdown here. What I like to do is I like to find that central point, aka the point of control, where the most amount of volume is happening. And that is the only level that I personally care about. So this is the indicator. This is what it's going to look like if you just manually pull it up. And what I've done is done a little bit of few tweaks, and you guys can see it just gives you a straight line. This is your point of control. So real quick, guys, gonna just show you my settings here, and you can pause this video, go back, and you want to make sure that you have all of these same settings. So you're going to change the tick size, you're going to change the time per profile. Just go through and really compare the normal one to the few tweaks I have here. You want to change all these little settings to match what I have. And you also want to go down here to the second section and make sure that point of control, POC, is plotted on. And then you want to unplot everything else, right? Unplot it, unplot it. All you want is that point of control to show. You can make it any color you'd like. And these are the settings you want. And again, guys, this comes from volume profile. So that's how you set it up. Let's dig into the real fun stuff. So as I mentioned, this is the level, guys, where the most amount of volume is occurring for a specific amount of time. And as you saw in my settings, I personally focus on what's called monthly point of control. What that means, guys, is I'm not on a monthly chart right now, but what I'm focusing on is getting the data for a 30-day span, the upcoming month here. So we just started our month. You can see this line has just started. It's plotting where that level of control, right, where the most amount of volume is occurring for the given month. If I just scroll back here, you'll see prior months was around 82. This month, point of control is around 83 for TTD. What you guys want to understand is once you reveal this level, you reveal a massive edge for your trading, because whenever a level has the most amount of volume, that's referred to as liquidity. And liquidity is just simply how the stock market works. I like to say this, guys, all stocks do is go back and forth to liquidity. That is all they do. Liquidity rises and stocks continue to rise, or liquidity lowers and stocks eventually go back to that liquidity. We play a game that involves playing with algorithms, playing with big money. And with that, what comes with that is needing to find liquidity. So I'm going to really dive in, guys, on this point, but I hope it's making sense so far. This is the level of control for the stock. This is the level, on a stock or index that they're going to drive it back and forth to over and over and over. That's just how the game works. So with point of control, guys, what I like to do is simply just reference the indicator. And then what I do is I mark that level on my chart. So I'm always aware of where it is. This isn't something that changes often, so you can check it, once a day, and then mark that level on your chart. So again, in our example here, start with TTD. The current point of control for this month is at that 83 level. So you want to know where that 83 is. And now let's talk about, guys, the two usages, or actually three usages for point of control. The first usage, guys, and I'm really going to make this simple. You can refer to point of control in two simple ways. First is it acts as a magnet, right? The first step is a magnet. And what I mean by that is the following. If price ever gets too far away from point of control, it'll typically go back towards it, like a magnet effect. You can see TTD here on Monday. They pushed down, and then with that magnet effect, they migrated right back to that level and then chopped on it. So the magnet can drag you to it. It can also keep you magnetized and stuck on it, right? Stuck on it, stuck on it. TTD explodes off of it and then gets too far from point of control, and the magnet brings it right back. Gaps up the next morning, right back to point of control and stops. So that's the first thing, guys, is the magnet effect, where even on a name like in a scenario where there's earnings. So as I make this video, TTD reported earnings and they went too far away from liquidity. So they went all the way back to that magnet and they're now just sitting here and consolidating. This indicator, guys, is extremely scary and extremely powerful because it is so accurate. And the reason it's so accurate is it revolves around things that will never change in the market. Money needs to find liquidity. There's always a central liquidity point that we want to be aware of as traders. I'm going to get into how you can go about prepping and using this, but this really, guys, is the first scenario of how it works. Is if a stock gets too far above it, it can work its way back, whether that's on the upside back to the down or on the downside here back to the up. It's going to go back to that magnet. So that's the first way that point of control works. The second way, guys, is it's also referred to as a cannon. So I call it the magnet effect and the cannon effect. And the cannon simply means when we get back to point of control, like right here, we can explode off of it, right? It's that central point where the most amount of volume occurs. So getting there is one mission, and then you can expect an increase of volume, an increase of, momentum right at that level. So you can see here, guys, on Wednesday, TTD got back to it on a Tuesday, consolidate all morning, opened, and then gave you that cannon effect where it explodes right off a point of control. Gets too far and comes all the way back. Right, guys, you can see many times. Here's another day. Explodes off of it, comes all the way back, and explodes off it again. So remember, it can also magnet, meaning it just gets back to it and sits on it, but it's a level where you want to see what happens next, because eventually it's going to push it off of it to either the upside or the downside. So you could take advantage, guys, of both moves, playing it all the way back towards it and then playing the push through it or back down off of it. It's really an indicator, guys, that gives you many options and ways to trade it. So again, a quick summary here. We have our point of control level for the current month. As this month builds, this level can change. And that's what I mean by liquidity is simply going to rise or it's going to stay where it is. As long as liquidity remains at 83 for TTD, we can expect it to just go up and then back to it, go below it, and then right back to it. So this is what I mean, guys, why big money just keeps going back and forth to it. That's all stocks do until they start to move out of the range and liquidity starts to move up. What you'll see, guys, on strong stocks is if it pushes off point of control and continues to rally, you'll often see this level rise as long as liquidity is actually rising. Where if a name goes too high and liquidity doesn't step up, and what I mean by that is this point of control level doesn't rise with the price, it's got a very good chance of coming back down, right? If TTD pushed here and point of control moved up to 86, it could just sit on it and explode off of it or explode back with the cannon effect. However, it remained at 83. So every time it gets far away from it, it goes right back to it. That's truly the name of the game here. So personally, guys, I always mark this level on my chart, right? Once you set up the indicator like I have it set up, all you have to do is through your prep process, go check that point of control level. And to give you guys a hint here, the only time frame that you want to use it on is the 30-minute, 10-day interval. That's all you want to focus on. At the end of the month, when you're getting to the last week or the last few days, you can switch it to a 15-day time frame just to confirm that it's still the same level. Sometimes it gets a little wonky towards the end of the month, but you guys can see between a 10-day and a 15-day, you have a really good sense of where liquidity is. So again, volume profile, go make these changes to make it look just like mine. All right, pause this video and change all of these settings. Save a 30-minute, 10-day time frame. And that's where you want to check for this level. So to give an example of how you can use this for your prep and for your trading is TTD is a great example. If you guys look at the drawing set I had for today, they popped really hard on earnings and they failed at a key level. They went all the way back to point of control with the magnet, and then they got the cannon effect and dropped it back down into open. This is a trade, guys, where once you recognize it bottoming, you can look to play it back to that key level, knowing that point of control is above. That's how liquidity is. Doesn't mean it's going to turn around, but if it does start to turn around, that's exactly where we can anticipate this level and looking to trade it towards. So you can buy calls, play it back. You can get out and let it sit on it like a good magnet. You can sell puts, expecting to go back to it, whatever it might be, guys. Same thing here, where, TTD pops and then fails. You can short it right back to that level as your game plan. I won't tell you guys how to use it, but these are the reasons and ways that you can use it. Is playing, here's the dip at open. Let me rip it back to 83 and then look to get out and then wait for the next good trade. So I hope that makes sense, guys. Going to go through a few more examples here to really drive it home. And another really good recent example is on Square. So if we take a look at this recent Square setup, it absolutely exploded, right? Starting the month here, liquidity was up here, right? So on this day, guys, the first of the month, right? The second of the month, but the first for the month of trading, Square exploded and liquidity stopped right here, right? It formed and created right here. So again, this is something that we want to understand as we prep and as we look to trade, knowing that at some point, Square can work its way back. So Square ended up, pulling back a bit, giving a really nice wedge. And then the day that it broke out, what are you expecting, guys? You're expecting it back to point of control and then maybe even through point of control, right? We get the magnet effect and then we get the cannon effect. It gets too far away and it goes right back to the magnet and consolidates. Today's session rips right off of it. So I hope that, guys, makes sense. Again, runs to it, goes a little too far, rips right back. These are the trades that you want to focus on taking. Really always understand, is point of control above? Is point of control below? Or are we on point of control? Once you guys can wrap your head around these concepts, that's how you slowly start to build your playbook for point of control. One setup I really like is a squeeze with point of control either above or below. That's something that when releases, it's going to go find liquidity. Vice versa. If a squeeze happens on point of control, you can expect a really big move off of that level once the squeeze fires. Really, guys, tie this into your playbook because you can have some amazing trades using just this one indicator, knowing and understanding where is liquidity. If I could only use one indicator, guys, it would probably be this one, because you don't need to be a genius to know, okay, we're not going lower. We could probably get a good chance of going back to 275. Boom. Square's looking a little extended, might go back to point of control. Boom. Rinse and repeat. Just to show you guys, this level works just as well on the indexes. Or if we take a look right now of where current point of control is being built on ES, the S&P futures, really nice level here, guys, of 44.11. So same things apply. When we get too far away, you want to look to play that bounce back. Once it gets on it, let it chop and figure itself out. And then we get the cannon effect. We hold again, we rip right back to it, we consolidate, and then explode off point of control. We get a little too high, overnight, the market pulls back, kisses POC, and then starts to migrate higher. Hope that helps, guys. And just to flip through, a few random names, it really works on most. A name like Tesla. All week, it's going back and forth, guys, to this one key level. Goes too low, rips back to POC. Hits that zone and fails, right back to POC. Really, guys, study the nature here of it. It's extremely powerful. You can put on literally any name. Here's an example of a name where liquidity is not quite rising yet on NVIDIA. This is what I mean by if a stock goes too far and we don't see liquidity step up, it's got a really good chance of going back to it. So in this example, if NVIDIA starts to break down through 200, it's most likely going to 197.5, which is where that current point of control is sitting. Got to understand, guys, liquidity is pretty much all that matters in trading. We go back and forth, back and forth, back and forth. You can pick mostly any name, guys. Coin rips to point of control and explodes off of it, right? Random name, Shopify, back and forth, back and forth. You can short it back down to it. The next day, you play it right off of it. So I could show you guys 100,000 examples, but this really is the essence of point of control, is finding that exact level on a chart that everyone is looking to get back and forth to. It's that control point on a stock. And if we as retail traders can be aware of this level and position and, build our trading plans around going back and forth to it, that's how you build a massive trading edge. We need to play with liquidity. We need to know where the liquidity is. And most importantly, guys, is learn to trust this indicator. You're going to see it work over and over and over and over, as hopefully I've showed and revealed here today. Any name, guys, right? Roku gets too low, opens, explodes to point of control. Gets too high, drops to point of control, explodes off it again. Hope you guys enjoyed this video. Again, go get these settings, play around with it, use it on a 30-day, 10-minute chart. But this is by far the best indicator that I have ever used, because you are putting edge in your favor. You're playing with big money. They need to go to liquidity. They run the game. We play it with them. Thank you so much, guys, for watching and listening. If you play with point of control and you have some success, would love to hear about it. And if you have any questions, feel free to reach out. But that's my secret. That's my gift to you guys. Go out there, make good use of it, make some good trades, magnet to cannon, and let's get a little bit better. Thanks for listening. Hope you enjoyed. Talk to you in the next one.